welcome. Welcome.
Looks incredible.
This is Quorum Club, India's most exclusive members-only club, which is run by Vivek Narain. It is a place where wealthy people gather for networking, unwinding and leisure. It will cost you up to 5 lakh rupees to become a member of this club. Let's walk through this club with Vivek and let's find out what's behind the scenes here.
Like, how did you design this?
So actually, this is the most fun part.
Yeah.
It's the creation part.
Quorum is currently located in 3 cities, Mumbai, Hyderabad and Gurgaon. This members-only club provides 6 types of memberships and annual costs range from 1.5 to 2 lakh rupees.
And all our clubs have an art gallery, by the way. And we try and change the artwork every 60 days to 90 days.
If you're a member of this club, you get access to over 200 reciprocal clubs worldwide, providing a global network of exclusive spaces. You also get access to art collections, rooms for business meetings, and private event spaces.
See, I really believe that there was a venue shortage. So I created a theater venue, a performance venue, TED Talks by day.
Wow, this is incredible.
Yeah.
Let's sit down with Vivek and discuss in detail about the economics of running a private club and how to become part of one.
Vivek, you had a fascinating journey. You're an investment banker turned founder of one of India's most exclusive private clubs. You started Quorum in 2018, where this concept of a private club wasn't in the wealth creator zeitgeist. Today, it's over 5,000 members. It's a fascinating journey. I can't wait to dive in.
Listen, thanks for being here. And thank you for doing this.
How did it come to be? How did you decide to set up Quorums?
Yeah, I think it was a opportunity that presented itself due to a number of factors. My wife and I were, I was 40 at the time, about 8 years ago, and at a bit of a crossroads in my career. I'd been a banker for the first sort of 15, 18 years.
Tell me more about the banking bit. Like what?
Well, I started in credit, actually. So I got into corporate banking initially. I started my career in New York. Was part of the startup team that set up Yes Bank, actually. So I had a little bit of a little startup experience back in the day, which is quite interesting because, one of the Kotak and Yes Bank were one or two of the first private sector licenses that were given out for a long time. So, that was 2002. I got a little edgy and I met someone. It was 2005, 2006. India was very hot, so timing also makes a big difference.
Yeah,
There was a lot of capital chasing in there.
that's right.
And I met a gentleman who became a business partner who had done a lot of work for hedge funds in the US. And we ended up representing a SPAC in India. I don't know if you know SPACs.
Yes.
We did a SPAC in 2006. We did a hospitality SPAC, and interestingly, that was the transition from corporate banking to the investment side with a lens in hospitality, and that's kind of been where the career has sort of, by default, sort of taken up from there on. I'd actually then did a small stint for about 4 years with a large global hotel company called Fairmont Hotels, now part of Accor. At the time, it wasn't, and I was on the development side of the deal making guy there. Got a good understanding of real estate, the dynamics of real estate in India. So I'd done these 3-4 strange things in my career. And my wife comes from a lineage of hospitality and design, and she's much more talented than I am. And I said, listen, let's do something together where I think I was unemployable. So I said, let's do something together. And we said, let's open a restaurant. And I said, so through this last few years, I'd got experience in this members club business that was trending and popping up all over in these capital cities around the world, all these gateway cities. And obviously there was a big brand called Soho House that was omnipresent in a few of the large main cities. But for every Soho House, there were 5 or 6 independently owned sort of clubs that were popping up. And I said, let's open a club. And it had hospitality, it had community, it had ideas, and all the things that I was personally interested in. So I think I got into a business that played to a little bit of what I thought were my skills or what are my skills, and yeah, we started doing some research and tried to find some real estate, and which took me about a year and a half, couple of false starts. I had no money, I couldn't raise the money because I didn't have the real estate.
Sure.
I couldn't lock up the real estate because I didn't have the money. So I was stuck in this sort of, virtuous cycle of doom. But yeah, we managed to kind of sort of hustle and get through to it, and started in 2018, and yeah, we continue to hustle, and we're a little bigger than what we were then, but we continue to do so.
Did you think of the economics around the business before you started, or you was like, we'll figure this out as we go?
No, so listen, everyone builds the Excel spreadsheet,
Yeah,
right?
yeah.
On Excel, it made sense,
Yeah.
right? I think it made sense. And I think now, after 7, 8 years, that Excel spreadsheet is starting to resonate, and starting to, I'm able to now, sort of trace it back and say that this made sense. But fundamentally, on the economic side, we said, hey, how do we make a space that's relevant through the day? Restaurants make money during meal periods, right? But you pay rent 24 hours, you pay salaries 30 days a month, you pay electricity for 12, 14 hours, but you only have revenue on 4 or 5 hours. So I said, listen, how do you make a space that's relevant through the day? It has revenue potential through the day. How do you make a space that has a annuity income, that's high margin business? And that's really the fundamental of this business.
Yeah, obviously it's easier said than done, but I guess like what I'm hearing is there's a high upfront cost. To recover that, you need a certain number of members, and therefore when you're basing a club in a particular location, you're thinking about whether that many members will be able to sign up, or you will be able to get those folks on. And is that therefore the decision around like basing it in Hyderabad versus setting up, let's say, Chennai first, or doing it in Calcutta first, and so on? So
Yeah, I think there are a couple of, so there are two, three. One is location, right? So you got to get that right. You got to make sure that that city has a cohort of interesting people. The city should have a good, interesting migratory population as well. To me, I think that's really important.
because
I
the
read-
traditional wealthy already have membership.
they already have memberships. So Calcutta is a bad example, actually. I don't see that on our radar, right? It's not a city where a lot of new people are going for economic opportunity. If anything, it's the reverse. People leave Calcutta to go out and work there. Plus, it's the club capital of India. The Tollygunge and the old British clubs actually started their journey in Calcutta, right?
Right.
So I really don't see us going into a city like Calcutta, at least from my lens today. Things change.
So migrants and relatively
I
wealthy,
think
for
I
sure.
think economics, Hyderabad is a great opportunity. It's a city it's on the move. It's a city that's attracting new companies, new businesses. There are more people moving here. They want a place of belonging. It's got established people. It doesn't. While it has a club culture, the infra is old. I don't worry about taking on the old establishment. I feel like London has 200 clubs, by the way.
I
The
don't know
city
that.
of
Yeah,
London
yeah.
has 200 clubs. If you're of a certain segment of society in London, you have a 25, 30,000 pound annual club membership budget.
Wow.
You have 8 or 10 club memberships. I'm not saying we are here in India yet, but I'm just saying so they can coexist, right? You have one club that you play polo in, you have one club that you play your golf in, you have one club that you go for your partying, you have one club that you go for perhaps, that's your, so you could have multiple club memberships. So
No, I want to talk about that. Like when you think about a new business, oftentimes there is an external parallel. So there was Soho House and some of these other independent clubs coming up world over, but there has to be a market demand for the product for it to really work. And around the time when you created Quorum, and I remember hearing about it
yeah.
back about 5 or 6 years ago, it was almost like people were wanting to be a part of something like that. So how much of that went into figuring this out, that there is a business model here because people want it?
No, I think that was an instinct. I just felt like we were ready because it was the other countries around the world. I think we were a little early. I think we were, I think SOAS opened the same year in Bombay, opened the same year as we did. I think we were, when you're early, you pay a little bit of the price of creating the category, right? Club per se was not a novel sort of idea, but building a community around, this third space and engaging it with create hospitality, not the 8 rupee cup of tea, but, paying market price for high quality experience, and then using sort of art culture, programming and ideas. And, we'll talk about that a little bit. that contemporary version of the club was a new idea. But I think our instinct, it was instinct that I think the markets was there. And people in Delhi would always say that, oh, we don't get to meet any interesting people. So I felt like there was a lot of interesting people that didn't have a place that kind of organically brought them together.
Yeah.
And I'm really glad we opened in Gurgaon. New city, city of migrants, or people who were migrated to the city for economic opportunity um, from all over the place. Kind of know each other, but don't really know each other. Sub-communities building around schools or your work or the condominium you lived in, but they were really sort of small. And we felt like, can we become like this melting pot for bringing interesting, like-minded people into a room, and then that kind of magic of people coming together, play out. So I had an instinct that there was a market for it, but yeah, I didn't. It was not. It was not. I didn't have any data that validated it at the time.
No, and the fact that a lot of people are interested in what you offer uh, is that, I mean, when we did our newsletter around private clubs, it just got a crazy response. People wanted to know more about, like, what are these private clubs? How do we get in? How much do they cost?
Yeah.
And now I want to come to, therefore, the economic side of things.
Yeah.
Vivek, you're an investment banker, so obviously you thought through the model, the revenue model, and how the profit will work out. There's a very high upfront investment from the customer's end also. There's like, I think what 5 lakhs is,
Correct.
last checked, was the amount of membership fee that you need to pay going in, and there's the annual recurring
Sure.
cost. How does it work out for the club itself? Like, how do you think about the economics from a club perspective? There's a high upfront investment from the club as well. I mean, we've gone through the Hyderabad club. It's fantastic, but I can think about like how many crores of investment would have gone into this. So how do you plan the economics around this space?
Yeah, I think I have to sell a kidney and a liver to fund this. No, listen, there is a high capital investment from our end as well. There are a couple of models globally. I'll use more of a generic sort of answer for you, but my sort of analysis on this is following. The upfront, so there are usually two components to a membership fee. There's an upfront component, and then there's an annuity component, right? Different clubs around the world use different models. The big, if you look at Mar-a-Lago, Donald Trump's club, I think it's a...
Where the new government is being run out of.
Yeah, it's a $500,000 initiation fee, right?
Wow, I didn't know.
It's a $500,000. So that's very high upfront. So if you're very exclusive, you take this very high upfront, right? Generally, what I've noticed is in this contemporary club business, there is an upfront fee that's slightly higher than the annuity, right? It could be a factor of 3 to 4x than the annuity that you want to take, right? The model is that at about 12 to 1,500 members, the upfront fee should give you a return on your capex,
Okay.
right? Okay. And then the annuity at that stage should cover your fixed costs, right? Okay. And then the remainder of the revenue is basically just has a variable cost to it. Let's say the sale of services of food and beverage. So fundamentally, this business, so you should look backwards and say, hey, if I've spent 100 crores and at 1,000 odd members, I should be charging them 10 lakhs upfront to make back my 100 crores, right? Now the question is,
Or you should have 2,000 members at 5 lakhs.
right? Now the question is, how are you going to ramp up to 2,000? Is the market for 5 lakhs at 2,000? Are we going to ramp up over 2 years, 3 years? The slower you ramp up, obviously you use that upfront capital to fund negative working capital as opposed to going towards your capital account. So this is kind of how the model works fundamentally. But a good club should, because of the dues, right, should be able to provide a high quality service experience because we run a slightly higher fixed cost than perhaps a restaurant or a dining establishment, that would charge separate fee. So you should be able to run on a steady state basis a 35 to 40%, EBITDA GOP margin at a unit level once you get to a stabilized basis. So to me, that economics was very clear. I studied that quite a lot before I got into this business. And I think we're starting to now see it in some of our older clubs, those economic side. But it takes time. It takes credibility. How do you get? You can't just sell to 1,000 members. Why would someone take a membership from you? You know, what am I going to get in return? What is the vasuli for the end user? So you've got to solve for that continuously. You've got to keep, and also you can't take it for granted. What are your renewal rates?
Yeah.
Right? You can't take it for granted. What are you continuously doing to engage your members? How are you continuously evolving and innovating on product as well to see that people see value in it? And then that aspiration of, hey, I want to be part of this. Are you building this community properly where people want to be part of this community? So I think it's quite multifaceted. It's not really as simple as an Excel sheet. Hey, I get to 2,000 members. 2,000 what kind of members? What is the renewal of that? If I may be able to sell it once, but what if they don't renew? You know, so I think it seems like every business. Nothing is rocket science, as you know. But you know, executing is always a little tougher than what it seems like.
But I think it's about striking the right balance, right? If everyone comes back every day, then you can't take on new members.
Yeah,
But
you know, it's not. That never happens.
yeah,
No matter what you do, that'll never happen. You know,
Sure.
so. There's actually during COVID, there's a club in San Francisco called the Battery. It's run by the Battery Club in San Francisco. It's run by this entrepreneur, billionaire tech entrepreneur called Michael Birch. And Michael started the Battery after he made a lot of money. You know, I started a club to try and make money. So, you know, we're approaching it the wrong way.
we'll talk about the money bit in a bit. Yeah.
But when COVID happened, Michael got 40, 50 club owners together. We did about 8 or 10 sort of Zoom calls over a 8 to 10 month period because we all had similar problems during COVID. And we became really good friends of all of us, all these club owners from around the world, right? Because we ran similar business models. We shared a lot of ideas and you know, learnings from each other on how they were seeing business bouncing back and all that. So one of the things that interesting that came up in this consortium, loose consortium that we formed at the time that is even looser now, but is when we were talking about capacity of clubs. What's the capacity of a club, right? So someone said it's 5 square foot of member area per member, right? And Michael used to say, he's saying it's a function of how long it takes to get a drink.
It's a function of how long it takes to get
If I can get you a drink in 5 minutes, and so he said when COVID happened and they shut down, he said I added 4 more bars so I could increase the capacity of members. So, you know, I know my member doesn't wait to get a drink, you know, so there are different ways to look at it.
Vivek, I was reading up about how private clubs like Soho have raised private equity capital
Yeah.
and gone public. You yourself earlier this year raised from Gruhas, which is the Nikhil Kamath
Right.
investment arm. What was your thought process around raising external capital?
Yeah, so I think one is Nikhil's and Gruha's investment is the latest round of a small stake they bought in our business. We raised external capital on day one, actually. It's friends and family, not institutional. You know, so I didn't have the money to set up this capital-intensive business. You know, I put up a lot of my capital as well. We thought we'd just do one club at that time. So we've had 1 or 2 rounds of capital from existing. We've had the same set of investors from day one. A little bit of a few secondaries that have come up and gone, but largely the same. I would say 85-90% of our investors have been there from day one.
So let's say when you get private equity capital in.
Well, we don't have private equity because we don't have institutional capital, right? We have friends and family.
So let's say Gruhas is an AI
It's
which
like
is invest-
quasi-institutional. I would say. I think it was our pre-Series A round, for lack of a better word, right? So, and the reason why we did it was obviously we see value in having someone like Nikhil and Gruhas being on our cap table. We have aspirations to go into Bangalore. Their relationship and sort of credibility within the whole tech ecosystem will be super beneficial to us when we do that. So there was strategic value of having them on our board. I also, as you're aware, when you in the evolution of your business, you know, when you start bringing in these quasi-institutional people, it also helps you reimagine your shareholders agreement that gets you, you know, even from a governance perspective, gets you ready for larger capital. I think we probably do 1 more round in about 12, 18. We're actually a profitable business. We were cash flow accretive. We raised a little bit of round because we needed, we couldn't fund this entire thing obviously through internal accruals. So we needed a little bit of external capital to get our Hyderabad project up and running. But we're, I think we will. So our aspiration. Let me answer you the question: where we see the future. Our goal is to make Quorum a lifestyle hospitality brand. The club will be one business.
Interesting. Okay.
We started with the club. This is our annuity business. That's our cash, and I think we will add adjacent lifestyle hospitality concepts to our repertoire over the next couple of years.
So paint this picture for us. Like what does adjacent lifestyle?
So
I
we
mean,
have
were talking about
a
wellness
meeting and
earlier.
events business called District 150.
Yeah.
That's in Hyderabad as well, where we believe that there's a venue shortage in India, hospitality-powered, creatively designed venues that are appropriate for corporate sort of events, social events, and consumption of culture events. So you've got Zomatos of the world getting into the ticketing business. You've got all these people. Where are the venues? So you've got this experience economy. Where are the venues? Right. So there's an infra gap there. Office buildings, I think, are reimagining itself in terms of what does the future of work look like. Our friends at Blackstone and Sattva in Hyderabad, who are our partners here in this property, sort of back this first part of our thing. This is an asset-light version for us. District 150 is an operator model / partnership model with developers. So we believe District 150 is, we're still working through the first one and understanding the unit economics, but we believe that this is a business that has a lot of scale opportunity, and this will be a separate entity altogether.
I have to say, I mean, going through District 150, I haven't seen anything like it. Like it's beautiful.
Again, we're a new category, so it takes a little time for people to understand what you've done. And I'm not going to lie, we're also learning how to operate it. So we're going through that curve at the moment. I think I think all our clubs will have hotel rooms going forward. I see ourselves getting into the boutique hotel business down the line. I see ourselves getting into a little bit of a residential for sale component business as well going down. So we'd like to we want to build a lifestyle hospitality platform. The Quorum Club business will be the anchor, but by no means will be the only business. So this is what my aspiration is as we look to build this business out. We could do standalone hospitality. And listen, once you build capability, you can build adjacencies around that capability depending on the opportunity set. I think as long as you're open and nimble. I think the core capability is hospitality, branding, marketing, sales. That core capability is something that we're still working on, but that's what we're building right now. Yeah.
And in this context, I mean, you put in some bit of a large part of your capital into building.
I went all in.
You went all in.
I went all in, yeah.
So did that mean that you sort of?
There's not a lot of all then, but whatever there was, they went all in, yeah. So.
Do you have a financial portfolio outside of the Quorum?
A bulk of my net worth, I would say very high probability of net worth is in my business. And at least for now, I feel like I'm compounding higher than if it was anywhere else. I have to believe that. That's what gets me up every day. But whatever little capital one does have, through, for the family, I mean, obviously, I don't pick individual stocks. While one does get, I see the value of long holding on equity. I have some mutual fund in an equity exposure that's done reasonably well, and I think rising tides have lifted all boats. I think no one's done what's kind of. I've got a little bit of US exposure in the markets. That's kind of done well for us as well. I bought a little bit of China exposure last year. That's kind of, I think, may do well because I think it was oversold, that market.
Sure.
I still got some. I bought some bonds as well because I feel like interest rates will go down, and I think we'll get a little bit of a increase in the value of the bonds in addition to the coupon that one gets. I don't have gold. I should have bought gold last year. I was thinking about it. I was thinking about buying crypto 6 months ago. I didn't do it. I may have missed that.
After the Trump election,
after Trump. Yeah. And listen, I saw it. I saw that coming. In a sense, I saw the sign that, I thought, I listened to this podcast called All In.
Yes.
Quite religiously. And, I think these boys get it 60-70% of the time right. And, they were, and in there, January 2024, beginning of the year pod, when they said what are they betting on, I think crypto was for Chamath at least one of the big ones. So for the reason that I mentioned, but I think we're precariously positioned. Global macro. I'm a student of macroeconomics. I'm quite sort of keen observer. So I do think there's quite a lot of risks in the world out there right now that's not priced in. So I would be more defensive in general. I don't like real estate as an asset class personally. I don't own a home.
You don't own a
I
house.
do not own a home. I'm a renter, and I mean, I may own a home as a primary home down the line, but I don't see the value. I don't have any form of owning a home. I love the fact that I can pick up and change my home at any time. I mean, my family has homes and what have you, and so we have family and stuff. But I personally have not bought a home, and I really don't have any desire to buy a home.
It's very Gen Z that way.
Yeah.
And how do you like manage the portfolio then? You seem to have a strong view on a lot of these assets.
I don't trade in and out. I mean, I thematically pick something and I sit on it.
So like, does your wealth manager weigh in on it, or you drive it yourself?
I drive it myself. I'm generally, I feel generally, I think the markets are a little too euphoric globally. I think there's a lot of global risk. I think everyone's very excited about, Elon Musk and this Vivek Ramaswamy and what they're going to do to this federal budget, but I think they could blow up this economy as well in 3 months.
Yeah.
I think people are not valuing that. I think the Middle East is very precariously sort of positioned. I think climate's a big risk to our world, which is not priced in properly. I think you've got these asset bubbles everywhere. I think 100 crore apartments in Gurgaon is ludicrous. Rental yields are 1.5%.
Yeah.
The reversion of the mean has to happen. It always happens.
Yeah.
I think US is also staring at a 80, 90 year, perhaps changing world order, if you listen to Ray Dalio. So I think you start putting all them together at a macro level. I'm a little bit more cautious, and I would be more on the preservation side. And it's tough to have that orientation because everything is going up.
Yeah.
And then the FOMO sets in and you're in this business. So that's my personal view. That's kind of how I'm looking.
No, absolutely. And I think then it goes to asset allocation.
Yeah.
It's about how well you're diversified to ensure that you're not overexposed to any of these kind of risks. And any one of them, if they materialize, it's like a significant impact on your portfolio.
Yeah.
I think the problem is that most of us have got indexed to recent return,
That's correct.
which is very high.
Yeah.
Like today, when we talk to investors and the expectation being in the range of 20%
That's crazy.
annualized returns,
It's crazy.
fixed income is no longer attractive. Nobody wants to put money in bonds. I think these are early signs that probably we should diversify ahead of others.
Well, no one, if you could time it, you'd be, is it early or are we towards, or where we are on this cycle of hubris? Or are we not? I mean, this is what makes markets exciting, right? Is everyone has a different opinion. Yeah. But you should bring it back to the micro. I think this is obviously macro, but on the micro level, I think consumption in India, we're in the first innings of where we are. So, while I have this view on the world more from a, academic perspective, what we're seeing day to day in our business is that, the Indian consumer will only move up the value chain for the foreseeable future. That's kind of the lens. So, this is the paradox of how one looks at it. That worry of the global macro doesn't really impact the day-to-day micro.
No, I think the paradoxes will exist, and clubs like Quorum will continue to benefit
I hope
from
so.
the India consumption theme. Vivek, this has been great chatting with you. Thank you so much for the time.
Thanks very much. Really appreciate that. Cheers.
Thanks.